JAG University, episode 8. Kevin, we're going to talk about why is it so important to know your rate. Not just what you're paying, not the premium, not the last page in your proposal. Everyone skips to the end, right? They look at premium recap, what I pay this year, what I pay last year. The truth is, you need to do a deep dive and figure out what is the actual rate. What is the rating basis to what you're paying for your insurance cost? Because that's a variable cost. There's a few different factors in it. Let's just break down assuming you're in a restaurant business.
Okay.
Right? Your biggest cost is going to be your liability.
Yeah.
And how that liability is based on or broken out or broken down is, what are your sales? Did your sales go up? Have they increased? Did you grow? As you grow, your insurance premium is going to be more expensive, but you're going to be paying less in insurance.
Yeah. So
I meant to say that again. As your sales go up, your out the door premium, your annual cost will go up, but what you're paying for insurance is going to be less.
it's less expensive. Yeah. So a couple key definitions for you. Premium, that is the total dollar amount you're paying for coverage. $10,000 a year.
Yeah.
Okay, let's say whatever. Rate and rating basis. Your rating basis is multiplied by the rate to get your premium. Okay, so what's your rating basis? What's your rate? If you're in a restaurant, your rating basis, which is the number they're using to analyze how expensive your insurance should be, is your sales, your gross revenue. And they're multiplying that number by a rate, which they determine through zip code, actuarial science, a bunch of numbers and calculations and algorithms.
Right. Stuff way above our pay grade.
Yeah, stuff that we don't really need to understand.
But we know how to look at your rate.
Yeah, we know how to get a better one. But that rate is multiplied by the sales, divided by 1,000, and gets you your premium. Okay, so what happens in a year where your sales increase, but your rate decreases?
In that case, you're actually paying less money in insurance than you did the year before.
Yeah.
Right. If you just stop looking at what the annual premium is in that recap page, you're actually paying less for every $1,000 of sales you did as a restaurant owner.
Exactly.
You're actually becoming more profitable as far as your insurance goes.
Exactly.
And I think that little conversation, that mindset, I think early on, and again, most agents don't explain it correctly to the insureds, saying, hey, what am I paying? Well, this is what you're paying, but this is your rate. And by understanding that as a business owner, you're also able to look at different options and understand why something might be less expensive.
Yeah.
Right. Someone might be using 1.5 million as a rating basis, right? Versus you're getting another bid or you're getting a quote and it's 1.3. Well, that $200,000 in variable estimated sales could be the difference of why something might be less expensive.
Yeah. And really all it is just people quoting you off of two different numbers. But if you look at the rate and you'll see the $1.5 million actually has a lower rate than the $1.3 million, that's the more competitive quote. Sure. You want that quote, even though it's as a higher premium, because it's a higher rating basis. Initially. But you know what? If you change that to an even number for both sides, all right, quote me at $1.3 million. That premium is going to end up being lower than the other one.
Well, knowing your rate really gives you the power as a consumer.
Yeah.
Like then it makes our job easier. In a sense, right? We're the ones that are giving that information out, but It gives you the power and the peace of mind to negotiate even more with your agent. You're able to decide, wait a minute, where were my sales last year? Because there's a little thing about audits, and let's define what an audit is, right? When when a carrier is giving you a price based on an estimated rating basis, they're going to verify that in 12 months. Why? They want to make sure the premium dollars they collected accurately is covering the exposure they're covering.
Yeah. So why they choose the rating basis they do. For a restaurant, for example, they use sales to determine traffic. It determines how many people are going into your restaurant.
It's the only way to figure out, right,
Yeah.
what the probability is for something to happen.
Yeah. The more people that go, the more likely something is going to happen.
Correct.
That's just how the world works, right? It's the law of averages. So that's how they figure that out. So if they look at your account, you give them $100,000 up front, and they decide, okay, the rate we give, that comes up to $2,000 in premium. At the end of the year, you actually do double the sales. They're going to want to have had double the premium to account for that additional traffic.
Right.
So they're going to give you a bill for the difference.
So then take a step back. So how come carriers, if you actually underperform in a year doing an audit, how quick are they to kind of send you some money back?
Okay, so it's actually pretty interesting. If you go back to episode 6 or 7, I'm not sure which one it is, where we talk admitted versus non-admitted. we'll see this a lot now. What's going on is admitted carriers may actually give you money back if you underperform on sales. But a lot of non-admitted carriers have a clause in there that's a 100% minimum earned deposit, which basically says at the end of the year, after you're done, the sales you have are the sales that they accept. They're not giving you any money back if you underperform. And that language is in the policy under minimum earned deposit.
And those are the conversations you got to kind of have up front, right? I mean, as a business owner, look, we all want to have that where we don't want to, we all think we want you to do well, right? But it's also that fine line of accurately putting those sales so you don't get those surprises, because you're not getting the money back, but in essence, you don't want to overpay for insurance. Most people don't know, if you're having these conversations with your agent, obviously we want to talk more than once a year, but 6 months going into a policy, there should be a conversation of how's the year going? Because you can make those changes during the policy term. Once it's over, it might be too late.
And that comes to understanding the carriers you work with. And for example, let's say you have two options here. One's an admitted option that if you underperform drastically is going to give you a check back, and the other one isn't. And the price difference is only $100, but you're incurring much less financial risk with the admitted option that gives you that flexibility. And it's understanding more than just, hey, I flipped to the last page and this one was a little bit lower. There's a lot of intricacies that go into this that can really affect you in other ways, especially after the year is done. So it's up to the agent to understand the markets, understand how they work, and understand how they look at different types of business. And that's really important. So when it comes to understanding how your policy is priced, it's, okay, how does this company work at audit? Will I get money back if I do less than my projected sales? And all these other little conversations that arise from having the conversation, understanding how you're priced.
The system's also set up for you to be honest. Because most people don't know, the higher your sales, the lower your rate. Right? So that trying to maneuver in a way where you want to use a lower number in sales to lower your premium but a higher rate, when the audit comes, you could be paying double than we should have been paying if you accurately, let's just quote unquote, put an accurate number, a historical number that you did the previous 12 months with, a 5-10% spread. The system is set up for you to be accurate.
It is. And another way that it's set up for you to be accurate as well. Okay, let's say you're halfway through the year, 6 months through the year. You're blowing your projected sales out of the water, right? If you go to your insurance company and say, hey, look, my sales are coming in a lot higher. Let's reflect that on the policy. I'm going to pay more now, and I'm going to distribute the additional premium throughout my finance agreement.
The remaining 6 months.
So I'm not feeling it all at once. Well, one, the carrier might not audit you, or they might give you forgiveness at audit if you even overperform that, because you've demonstrated that, that honesty and that you're willing to work with them. But more importantly, you're not getting hit with a bill out of the blue at the end of the year for another essentially year of premium, which you expected up front, with the threat that if you don't pay it, they're going to cancel the new policy that you have in force.
And send you to collection. So now I have this huge bill. Now I have to pay it within a few weeks, or I get sent to collections on top of just having bought a new policy. It can get ugly pretty quick. And the information's out there more. I mean, years ago, you could have tried to fight that previous carrier on that audit bill. But now, because of technology, being put in collections and having an audit open and delinquent could affect your ability to buy insurance in the future as well. Carriers find out about that. It's gonna further put your back against the wall. If there's 3 carriers that are competitive in your business, in your area, and you burn one of them at audit, what's the odds they're going to insure you again? Right. Yeah. The odds start to kind of go against you at that point.
Exactly. And also for projecting your expenses as you grow, it's important too. It's, hey, I can expect, if you understand your liability insurance as a variable cost, and your accounting team or whoever's handling your projections as you grow is seeing, okay, look, our revenue is growing, we're going to account for our total insurance bill to also grow proportionately.
Now, that works too if you know your rate.
Yeah,
because if you understand you're paying $3,
you'll know exactly
for every $1,000 in insurance. You can calculate that. And then I think any business owner wants to know where their money's going to.
Yeah.
Like if they just think you're plucking out of the air, hey, $10,000 for my liability policy, that's not the case. It's broken down this way. That gives them the clarity and the peace of mind that, okay, we're in that partnership. I understand what my insurance cost is for what I'm making, and like they do for every other thing as well.
Yeah.
That's the next level of transparency that people need to talk about is, hey, what is my rate? How am I getting to this number? And then that way you can have a better understanding as your business grows, which we hope everybody's business grows. The good news is you're going to pay less for every $1,000
that you make.
Yeah. But so don't just go to the end of a premium, because sometimes when you go to that and you're bidding on your insurance, you're not maybe getting an accurate number. They're lowering sales, the rates being manipulated. Transparency is the key to insurance. The more transparent and the more you understand as a consumer, the better decisions you're going to make, both short-term and long-term.
Exactly. The most horrible thing you could ever see is if you have two people competing on an account and the other agent just lowers the sales to get a lower premium, but they end up having a higher rate.
Right.
And at time of audit, that client ended up paying more. And getting an unexpected bill at the end of the year at an inconvenient time when they're also expensing the next year's insurance, and they're getting hit from both sides.
It's not the position you want to be as a business owner.
Exactly. That's why we don't do it that way. Yeah.
That's why we don't do it that way.
Yeah.
So JAG University, JAG University, episode 8, know your rate. Don't just go to, I'm asking you, next time you look at a proposal or a bid, don't just go to the last page and look at the premium recap and compare it to what you paid last year. Hey, it went up 10%. There's a chance as your business grows, you save 20% in your overall insurance cost, but your premium went up. Why? Because your rate was lower and how they're factoring that cost. So know your rate. The more you know your rate, the more information you have, the better peace of mind you have as a business owner, and the better decisions you can make when you're buying insurance policies.
Absolutely.